Has the stock market crash been postponed as we've seen the small caps rallying up on Friday? The question is, has Jay Powell's next move already been leaked? On Friday, we saw small caps not only gapping it up, but also closing near the high of this session. Then we come over here and we look at the yield curve. We can see we most certainly are uninverted. And this week, it's going to be all about the Fed. We were also able to get out of fear territory. We are almost dead smack in between fear and greed. Now, last week, we had another investor sentiment survey come in, and it came in at 39.8. That's one of the weakest bullish readings that we've seen in quite some time. However, the markets continue to rally up higher. Can we continue to rally into Wednesday's FOMC meeting? And the big question that everybody's going to be asking themselves, is Jay Powell and the Fed going to be cutting rates by 25 basis points or by 50 basis points? You guys let me know what you think in the comment section down below. Now, as we come over and look at the charts real quick, I want you guys to pay attention. Dow Jones Industrial Index is in the upper chart. The bottom chart is the transportation index. And what do we see? Well, we can see the Dow is almost right there, about to make another new all-time high. However, if we look at the transports, simply not confirming those new highs at this moment. However, when we come over and look at HYG versus SPY, notice HYG has been in this channel and now it is broken out. However, the chart up here on the top is the S&P, the SPY, and we can see the SPY has not been able to make another new all-time high yet. However, we are not that far away. We are on the cusp of being able to break to new all-time highs. Then we cut over here to this article right here. Big bets on a Fed rate cut just won't die. What stock market investors need to know. Now, why all this is important and what was caused that massive rally in small caps on Friday was this article from the Wall Street Journal, and more importantly, Nick Timiraos, and again, they call him Nicky Leaks because the Fed always leaks out. And basically what he goes on to say is, should the Fed go ahead and cut by 50 basis points? And again, this could be the Fed's way of trying to fill out the market so we don't get a big shock when the Fed does cut rates out here on Wednesday. Because if we look right here at the betting odds, we can see there's a 50-50 shot that the Fed is going to cut rates by either 50 basis points or 25 basis points. Now, what would be really crazy is if the Fed does something the market does not expect. Either don't cut rates or cuts rates by 75 basis points. And no, that's not what I say the Fed is going to do. But again, we want to keep an open mind. This could be a very real possibility. Now, I also want to bring something to you guys' attention real quick. Now that we're in September, I want you guys to focus on this chart. And I've talked about this in several videos in the past, but what this chart goes on to show us is going all the way back to 1928. We look at the first 10 days of the trading month and the last 10 days, and we look where we are in September. September is the most bearish month out of all the months out there. And more specifically, the last 10 trading days of the month, you can see on average, we're only up 39.58% of the time. So is the Fed going to induce a pullback in the market when indeed the Fed does go on to cut rates? And we look at this stat right here. This goes all the way back to 1974. And what this goes on to show us is the performance from September 19th through the 26th. And I want you guys to pay attention real quick. There's a couple things within this stat we want to pay attention to. One, we're only up 16 times and down 34. Not a very bullish stat. Anytime we get a 3% move in this time period, it has been all 9 occurrences have been to the downside. A 1% move or more, 7 of the times have been bullish. 21 of those times have been to the downside. Now, when we look at after OPEX, because keep in mind, Friday is going to be quad witching. We have the futures contracts rolling over. I will be trading the December contract when the market opens up on Sunday. When we look at after OPEX for the remainder of the month, go ahead and we can see that, again, we have the same average in terms of up versus down. 16 up, 34 down. However, when we come over and look at 3% moves, now you can see that we've had 7 down and we've had 1 of those actually up. So maybe the Fed does cut rates, and just maybe we sell off a little bit right on the initial news. And then after OPEX, the market goes rocketing up, taking out the highs and making new all-time highs. Now, when we come over and look at Boeing stock, I got to be honest with you, does not look like a very healthy chart. You can see we've had this push down. Now we have this lower level consolidation. Are we going to go ahead and flush down towards this high volume area at about 133 and then go on the attack towards some of these other swing points a little bit lower. When we dive down over here and we look at the weekly chart, you can see the MACD indicator just starting to cross to the downside. Then we look out here on the daily chart, you can see the MACD indicator is below the zero line. We still have a bearish cross of the lines. We look at this recent article, Boeing credit rating, risk being cut to junk after Moody frets about strike. Now, if they go on strike, that is going to be even more problematic out here for Boeing, and maybe that's going to put a little bit of pressure out here on the stock market as well. Now, I want to remind everybody, Apex has extended their 80% sale off all their valuation accounts, past in as little as 1 day, and even better, $85 activation fee on all account sizes. If you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. Now, on Friday, when we saw the Russell 2000, the small caps rocketing up to the moon, we come over and look at the dollar index. What was it doing? It was suffering a bit of a pullback. However, when we look at the dollar index, now we have a wick on this candle here, which I was thinking could be part of a double bottom pattern. Then we come down, and on Friday, we form another hammer candle. Now, this week is going to be critical. Does the dollar flush below the wick on Friday and make it run all the way back down here towards these lows? And if so, again, I'm not a big fan of triple bottoms. More likely than not, if we come down there again, we're going to break and go substantially lower. And we saw gold out here on Friday making new all-time highs. Gold finally last week was able to complete our ABC pattern completion to the upside. However, there is a 127 extension up here at 2637. We'll see if we overshoot that. And we have another little ABC pattern that's still in play up here towards 2670. Now, the 2670 ABC, let's talk about where that pattern gets invalidated. And that would be if we come back down below the swing point down here at about 2503. Now, as we come over and take a look at crude oil came right back up. We wicked our line that we talked about over the past, several days and whatnot. And essentially that line comes right off the swing point over here. If we cannot get back above it, then I'm not going to be so concerned about this structure breakdown point coming back and getting retested. However, the MACD indicator on the daily chart is a little bit overextended. And one of the trading ideas we had earlier this week was right here, retesting these minus development areas. You can see we came up there, boom, smacked right back down, had a nice little double bottom-ish, and then we started to rally on the way back up. Now this week, we want to keep an eye on the VIX. The VIX was down once again on Friday. The VIX is back down to the mid-16s. Is this going to be the case where we start to see a volatility spike? Is a seasonality effect going to start to weigh on the stock market? If that seasonality does hold true, then look for the VIX to start spiking up. And VIX spiking up, well, we already know that means the market's likely going lower. Now, if you do like to trade the small caps out here, we have the potential for an ABC pattern on the way up. However, but not so quick, because we got to also look at this from this standpoint as well. We have a high, we have a lower high, and if this ends up producing a lower high, then that's going to be a context of a downtrend. The one problem that we do have is we do have a higher low setting up right here. Now, if we can push up and above 22 and a half, then we go ahead and grab our Fibonacci extension tool, measure A to B equals C to D, gives us a price projection up here about 230. That puts us above the recent swing high that we've seen. Now, keep in mind, the Russell 2000 is still well off of its all-time high. It's not part of the cool kids club like the Dow and S&P 500, where it's about to make another new all-time high. Then we come over, speaking of the Dow, we look at the Dow. We have a little bit of a wick on the candle out here on the weekly. MACD indicator, as we're coming up, trying to make a new all-time high, MACD indicator just is not confirming it. And if we do look above the highs, are we going to be able to hold? And is this going to set up a MACD divergence type of play? Out here on the daily chart, you can see on Friday, we have a little bit of a wick on top of the candle. However, still a very bullish push this week. You can see we come down, we just barely missed filling the gap right down here. As we're back up here towards all-time highs, notice the MACD indicator at this moment simply not confirming those new highs. On the 4-hour chart, as we're back up here, you can clearly see the divergence as well. So again, it would make a little bit of sense if maybe we start to pull back into the Fed, seeing a pullback down towards about 408.80. But at the same time, if you guys tell me we're going to go ahead and make new all-time highs, I really would not be that surprised either. Now, when we come over and look at the economic calendar for this week, what do we have on store? On Monday, we have the Empire State Manufacturing. On Tuesday, we have retail sales coming out at 8:30 a.m. Then Wednesday, it's going to be all about Papa Powell, and we will be streaming the FOMC in the afternoon. So hopefully you guys will be joining me on the weekly live streams this morning, which I start streaming at 9 a.m. So make sure you're subscribed and you have the bell notifications turned on for all. We also have the Bank of England also coming out with their monetary policy statement as well on Thursday. And we also have the weekly unemployment claims, Philly Fed manufacturing index, and existing home sales all coming out on Thursday. And let's see, is there anything in store on Friday? And Friday, we have Harker speaking at 2 p.m., but fingers crossed, I'll be done trading by 2 p.m. Now, as we come over, look at the QQQs real quick. You can see we had a nice bullish candle closing above the prior week's high. Then as we come down, we look out here on the daily chart. What do we see? MACD indicator just crossing, trying to get above the zero line. We've had quite a nice little push up, but if we do a simple candle count real quick, we see we've had 1, 2, 3, 4, 5 up days in a row. Doesn't mean we can't have 6, 7, 8, 9, but we are susceptible for a little bit of a pullback in this market. And we're coming right into this little high volume area. Now, if we can clear above the swing high up here at about 485.84, then watch for the market to go ahead and make a larger ABC pattern on the way up, which would take us all the way back above all-time highs in the market. And as we get close to that, we'll draw that out. Now, if we do break above that, now one of the first targets I would want to focus on before the ABC completion would be up here at about 496.12. Now, when we come down here, we look at the 4-hour chart and see the MACD indicator is crossed to the upside. And you see we're coming right up into this high volume area. Now, it would make sense if we come into this minus development area here. First time up, the market comes up, we reject back down. We'll see if we get an early lift in the markets next week. Then out here on the 30-minute chart, you can see just a straight vertical move on the way up. But then Friday's range was a lot smaller than what we've seen previously. And as we start to look at this, if we really start to break down below this distribution area over here, we're likely going to come right back over here and re-challenge this minus development area anywhere from about 472.17 to about 471.29. Now, as we come over, look at the futures markets, this is where it's going to get interesting, all right? Because I'm going to share with you guys some levels off the old contract and the new contract and show you how there is a discrepancy in one of the setups I'm looking at. But first, we come over here and we look at the 4-hour chart, and what do we see? Well, we pushed off the lows quite well. We've had very little down candles from this candle wick right down here. We've only had 1, 2, 3, 4, 5 down candles, and right above us at 20,117, we do have an untested point of control as well. Now, one thing to note from a weekly perspective, we were able to close above the weekly value area high, which comes in at 19,410.25. That is going to be a very high probability target out here this week. If not this week, the following week. But most certainly, we want to keep an eye on this level. We will be actively monitoring that level during the live streams as well. Then as we come over and look at the daily chart, notice we do have 2 consecutive untested point of controls. The third one we basically closed right at. But notice, if you guys remember on Friday, I was looking to target the value area high from the prior day. We had 2 days back to back where the market closed outside of value, and that is an anomaly in its own. So I thought Friday we'd come back and basically test this level. Now, if you look at the forward contract, the December contract, you can see we actually came back and tested it right there. But when we come over and look on TradingView, here was the first day we closed way above it. Here's the second day in question. If I were to drop a horizontal line right across this value area high, see how the price is different, right? We never came back and retested that level. So how do we deal with this? Because now off the old contract, we have 2 untested value area highs. And here's how I plan to handle it this week. Since we also have 2 untested point of controls, I'm just simply going to go ahead and focus this week trying to get a retest down here at 19,570 on the current contract. So again, that's the way I'm going to go ahead and resolve that issue for myself internally. Now we look at the profile shape. We had a D as in dog shape profile with value area high being up here at 19,787.00. The point of control comes in at 19,740 and value area low coming at 19,696. Now, for all intents and purposes, I would love to see the market gap up on Sunday because then I am going to actively short the market. Other than that, I may want to wait and see, can we break below value area low, then target the low out here from Friday, and then push the next target all the way down here towards the untested point of control at 19,570. Now, when we come over and look at the S&P 500, we also had a very bullish candle closing near the high of the range. MACD indicator on the weekly chart just kind of flatlined up here at elevated levels. Now, when we dive down and look at the daily chart, notice the MACD indicator as we're coming right back up here towards a recent high. And keep in mind, all-time highs is just slightly above us. Now, when we look at this right now, it looks like we may have a little bit of divergence, and we've had 1, 2, 3, 4, 5 consecutive up candles in a row. So if we start to get a pullback, where is that pullback likely going to come into play. When we look at the 4-hour chart, you can see a very strong move on the way up. One of the areas I would want to watch would be this minus development area of this profile at about 557.00. Out here on the 30-minute chart, you can see we had a relatively tight range on Friday, but I'm kind of digging this area right here. I'm going to go ahead and make this a little bit larger. I do think that we come back and re-auction this area sometime this week, anywhere from 557.07 down to about 556.30. Now, if we just dip down there and then we bounce and rally back up, that could be very bullish, and that could be exactly what the market needs to go ahead and rally to new all-time highs. However, if we start failing up here, that would be basically a triple top-ish failure and will likely come back down. Now, even if we do get a little bit of weakness up here, I think as we start to dip down, we'll probably try to push up and out at least going in to the end of the year. Then as we come over and we look at the futures markets real quick, what do we see in store? Well, on the 4-hour chart, we were able to make it right back up towards this high volume area, which we were talking about during the morning analysis part of the live stream, the first 30 minutes of the live stream. And we made it up there. Now what? Are we going to turn and come back down? Because if we look left, that puts us right in the middle of this upper level consolidation over here. Now, if we were to come down, notice the value area high is all the way down here on the weekly chart at 5591.75. With the point of control down here at 5538.25, value area low down here at 5471.75. Now, that'd be pretty amazing if we made it all the way down here. Now, I do think if we get quite the volatility out there with Jay Powell, we have a shot to get a knee jerk, maybe back down towards value area high. But keep in mind, we are far away. And most of the time, if we close real far outside of value, normally it takes a little bit longer than the normal 1 to 2 sessions. And in this case, since we're looking at weekly profiles, 1 or 2 sessions would be 1 or 2 weeks. So it might be prolonged a bit longer. We come over here and we look at the daily profiles. What do we see? Well, on Friday, we had a very tight range. We only had a 44-point range. And I say tight because the day before, 66. The day before that, 155-point range. Basically did the V-shaped bottom, boom, rocket ship on the way up. Now, as we're looking at this, you can see it looks like we may be starting to form a little bit of an ABC pattern on the way down. On the 30-minute chart, if we can break below 5681.50, then we have a shot of running down, probably down towards somewhere in the ballpark of about 5670. Keep in mind though, I'm still watching this minus development area down here at 5580 that I think has a shot of coming back and get tested. However, we have another minus development area that's even more important to me, and that's going to be right in the ballpark, right up in here. And that comes anywhere from the ballpark of 5642.5 down here to about 5639. Now, I do think it's highly probable we come down there. Now, keep in mind, the first time we come into a minus development area, the market either goes sideways, bounces, and goes back up. Then as we come into it a second or third time, that's when that level will normally flush. Now, I say normally, that doesn't mean it happens 100% of the time, but we want to be on high alert for that. So we can use this as a target location. If indeed the market is staying below value area low, then this is going to be one of the targets, one of the runner targets, not one of my primary targets. Now, if you want to learn about what is prohibited with my funded futures and what will stop you from getting a payout, make sure to watch this video right here.